Hello, everyone. I'm Bob Goulder, a contributing editor with Tax Notes. Welcome to the latest edition of In the Pages, where we take a closer look at some of the content from our print and online publications. Today, we examine the topic of tax secrecy. To what extent should the law strictly prohibit disclosure of tax-related data? And should that answer depend on whether we're talking about big multinational corporations or individual taxpayers? Also, does it matter if the type of access we're talking about is limited to other parts of the government as opposed to releasing the information to the public at large? Well, our featured article for this month gets into all of that. I have to say, it doesn't pull any punches in the manner in which it goes about making its points. The article is titled, What We Give Up with Tax Secrecy, and it was written by Jasper L. Cummings, Jr., an attorney based in Raleigh, North Carolina. Regular readers of Tax Notes will be very familiar with Mr. Cummings due to his many excellent publications with us over the years. And I have to say, we're delighted to have him as our guest. Jack Cummings, welcome to the program.
Thank you.
All right, let's get right into it. You begin this article by talking about an episode that happened up on Capitol Hill not too long ago. And there was a Treasury nominee who was getting grilled by some senators about the importance of taxpayer secrecy. And if he was confirmed, would he promise to take it seriously? Now, in that exchange, your description, you use a phrase that struck a chord with me. You use this phrase, the power of keeping others from knowing, quote unquote. Can you explain why that power is so carefully guarded?
Well, I think it's guarded particularly in the tax area because in the past, many important and long-lasting changes in the federal tax laws were instigated because of some sort of revelation to the public about some sort of taxpayer behavior that was generally not well perceived. An example is the alternative minimum tax, which was kicked off by revelations that hundreds of wealthy persons had not paid any tax back in the 60s. Now, maybe the alternate minimum tax is not a good example because most people don't like it and think it was a very bad move. But at any rate, it was a response to a public revelation of facts about individual tax paying.
All right. Now, when we think about taxpayer secrecy, we talk about it being a right, like you have a right to confidentiality, and there's statutory references to that, 6103 and so forth. What I'd like your opinion on is, if we think of this as a right, is it an absolute right that is, handed down from above, or is it something that is highly contextual and has to be balanced against other compelling state interests? What's your thinking on that?
Well, in my opinion, it has to be a relative right balanced against competing interests. As I said in my article, and frankly, I was a little bit surprised to find when I started researching, one of the first writers to write about taxpayer secrecy or privacy was none other than Boris Bitker. And one of the reasons Boris Bitker was such a protean writer in the tax area is that he sort of always got there first and to important topics. And his general take was that it had to be a relative right, and it had been a relative right over the years. Here it's important to draw the distinction made in the title of the article between tax return privacy and secrecy about taxes. No one is expecting to see another person's tax return, for example, with names and maybe business secrets appearing on the face of the return. But in many cases, we do expect to know something on the order of statistics of income, perhaps with more in-depth analysis of what certain groups of people do and do not do with respect to their taxes, and how much and why or why not.
Now, you mentioned in your article that there are some good reasons for tax return secrecy, at least in unredacted form. And when there's that qualifier on the end there about unredacted form, it makes me think, what's the implication? Are you okay, let's say, with releasing taxpayer information in redacted form if you don't give the names and the addresses away, and if you don't give any trade secrets away, if you just publish returns and just black out everything that can be used to identify the taxpayer?
Not really. If for no other reason than the fact that probably the most interesting returns would be almost inscrutable. Most returns today are filed electronically. Returns of corporate taxpayer groups, public corporation consolidated groups may run into hundreds of pages. And in many cases, there'll be a multi-$100 million entry with the only indication of what it was that this was a loss. So there's not necessarily that much to be derived from the face of a particular return. As the article discusses, although full tax returns were public in the early years of the income tax, the closest we have come to that in the last, let's say, 100 years was the pink slip system, which was just mentioned in the article, which each taxpayer was required in the 30s to fill out what was a pink slip, and actually the form number is still used today, with their name and the amount of income tax paid. The swift repeal of the pink slip requirement is an important lesson in the politics of tax publicity. Since I wrote the article, I have read yet another discussion of this little episode in tax history about the pink slips, written by a friend of mine, and he just said briefly, he said, after the pink slips were required, there was such a hue and cry from the public and complaint to their congressman that Congress repealed the pink slips. Well, that's not exactly what happened. And I think that's a pretty good illustration of how, you sort of need to dig below the surface of historical events, which can be a little bit hard to do, 90 years after the fact.
And before I let go of this idea of disclosing tax returns, because you said before, this isn't really about just like showing people tax returns. There are some academics who would say, though, at least for really big corporations, major multinational corporations, is there a case that their tax returns should be disclosed in the same way that they have SEC filings that you can go and look up online? If you wanted to see how much tax does Facebook actually make, just to throw one name out there, what do you think are the pros and cons of that? Not for everyone, not for small businesses, just for major multinationals. You could almost think of it as, the price they pay for being publicly listed.
Actually, the price they pay for being publicly listed is that they're subject to the classic two-tier income tax for corporations, because as a practical matter, except for the few closely held C corps that weren't well advised and became S corps, pretty much the only C corps are public corporations. But you're suggesting maybe another penalty, which would be revelation of their tax returns. Well, as you know, and as I indicated in the article, the code for over 100 years, literally, and it's still in the code, there's a provision that allows any, quote, bona fide shareholder of record owning 1% of the outstanding stock of any corporation, not just a public corporation, but any corporation, to inspect the tax return. The reason you don't hear much about this is probably there's another section that makes revealing what you learned when the 1% shareholder looked at the return a felony, punishable by a fine up to $5,000 and a 5-year imprisonment, or both, which is pretty serious. So it wouldn't do you much good to exercise your right as a 1% shareholder if telling your wife about it could get you put in jail. But that's been in the code for over 100 years. even though I personally might think that would be a good idea. As a practical matter, I think we all know that corporations, particularly public corporations, have too much muscle to require their returns to be made public. And as I said, anyway, I think the returns would mostly be inscrutable, except for the top line numbers. I think the better approach is for the IRS's statistics of income to provide perhaps more in-depth and segmented analysis of corporate methods of reporting and tax paying.
Putting returns aside, if we just think about aggregations of data, why don't we have more of that available? Your paper mentions this concept of tax data shyness, which when I first read that, I did a little bit of a double take. And I'm like, well, I see what he's talking about, though. Yes. I mean, we do have this, publication of aggregate data, but, I'm left wondering, is there more that we can do with it? Do you think what we're doing now is adequate for purposes of keeping the public well informed?
I don't know. I have not personally done an in-depth study of the statistics of income or other information released about returns by the IRS. I did begin to look at it as I was writing this article, and I came to an impression that the annual report of statistics of income had somewhat declined in scope and volume in recent years, but I can't prove that. And I would like to look into that. I think we can both agree, based on press reports or absence of press reports, that there have not been really any revelations that have stirred the public lately about non-taxpayers through the statistics of income. Pretty much the only revelations that we get is when a congressional committee chooses to focus on some taxpayer that it finds out about and wants to highlight.
One of the names that came up in your article was that of former President Nixon. I suppose it could be argued that he left us with many legacies, but at least one of them relates to tax administration. For the benefit of those who might think that tax return secrecy dates back to the beginning of time, can you recount that relevant history involving the Nixon administration?
Well, some might say that the abuses that have been documented in the Nixon administration with respect to using tax return information and trying to use the IRS to go after enemies of the administration. Some would say that that didn't start in the Nixon administration, and the only reason we sort of focused on the Nixon administration is that he had the misfortune of having the tapes. And the tapes reveal that Nixon expected routinely to use tax return information to obtain political advantage. At that time, the president was thought to have the absolute right to get anyone's tax return from the Internal Revenue Service, presumably because he was the chief law enforcement officer. Now, Nixon had two commissioners, Commissioner Thrower and then Commissioner Johnny Walters. And both of them ultimately got fired or quit because they would not cooperate with Nixon's use of the IRS in his political machinations. However, somebody cooperated, whether it was Thrower or Walters or some underling up to some point, because it is documented that certain audits were begun because against people that were Nixon enemies, such as Larry O'Brien, who was chairman of the Democratic Party at the time. Also, it's known that Nixon got hold of people's tax returns that he was interested in. For example, Billy Graham, who of course was a friend of Nixon.
Just fascinating. So that's what was going on with the Nixon administration. Then you have some post-Nixonian reforms about who can access these records. A lot of those reforms, when you think about it, it sounds like good governance, but the question I'm begging to ask is what went wrong? Because it seems like maybe from these good intentions, maybe we had um, unanticipated outcomes. Were those reforms good?
Well, generally, I suppose they were. I don't think anything necessarily went wrong. The main reform to which you're referring, or at least the immediate one in the aftermath of Nixon, was the Tax Reform Act of 1976, made, for the first time, made tax returns not be public records. I mean, let me say that again. Before the Tax Reform Act of 1976, everybody's tax return, everybody's income tax return, yours and mine, whatever, they were official public records of the United States, documents that people had filed with a government agency. They were classified as public records. Now, that doesn't mean you can walk down and ask for one, because there were various rules and regulations as to how they might be obtained and who could obtain them, but they were literally public records. And that was changed in 1976, and it was made much more difficult mainly for the White House and for other government agencies to see tax returns. Because, for example, Nixon wanted the Department of Agriculture to have access to everybody's tax return. Of course, the Department of Agriculture administered, a lot of programs like, free lunch programs and other kind of food programs and farmer support programs. So, it would be quite interesting for some purposes for the Department of Agriculture to look at all the farmers' tax returns. And that was part of Nixon's program, but that was changed by the 76 Act. And there's little evidence that the misuse of return information that occurred in the Nixon years continued. But in parallel, there came a major change in the way the IRS was viewed, because you see there had been major, real sure enough, IRS scandals in the Truman years, but they were ancient history by the time Nixon came along. In those years, the IRS was generally viewed as sort of a bunch of green eye-shade accountants who might do their jobs aggressively, but were, for the most part, honest civil servants. However, in the 1990s, there came a series of bills of rights, taxpayer bills of rights. They started at the state level, and then we began to get a series of taxpayer bills of rights in Congress. Generally, these appeared to be high-minded efforts to protect citizens, but they had the effect, whether intended or not, of sometimes demonizing the tax collectors, the IRS personnel, who the bills attempted to restrain from various improper actions, even though there was little evidence that there was a lot of that type of improper action. Anytime some tax return information leaked out to some news organization, for example, it was assumed that some bad IRS agent was to blame, when in fact there were a lot of other sources for tax return information besides IRS agents.
As we move towards the end of the interview, I want to circle around to this idea about this old saying that abuse begets reform. You mentioned a while ago that you can connect the dots between some disclosures that were made by Secretary Barr in the 1960s and how we ended up with the AMT. If we have this data shyness, so we're not getting enough information because of data secrecy, is that in effect holding us back somehow? I just wonder, how are we going to achieve more progress towards a better and fairer tax system if the public is kept in the dark in some ways? What's your thinking on that?
Well, obviously, I agree with your premise, but I think we have another problem. I don't think the problem is so much truthful information, and if we could get truthful information out, we would get tax reform. Unfortunately, I don't think that's the way the system works anymore. As we all know, a wholly new phenomenon has overtaken public discourse, where factual information tends to be trashed and untruths are widely believed, and hardly any legislation moves because the public got exercised by truthful facts. Somehow, and I don't have a clue as to how, that problem must be addressed before we can hope to return to some sort of regular order in tax legislation where, a real problem is identified and really addressed by a change that might really affect it. I think that this new problem may be bigger than all of us.
Yeah, I think that touches on basic human psychology and sociology and goes far beyond the Internal Revenue Code. So in closing, my final question to you, Jack, towards the end of your article, you say that you can almost predict how a person is going to feel about tax secrecy by understanding which kind of a leak they're more troubled by. So what are these two types of leaks? There's the leak of tax information, and it doesn't have to be tax returns per se, but just, a disclosure about, billionaires not paying taxes, that kind of a leak, or the more figurative leak in the tax base that allows a lot of capital income to go lightly taxed when it really shouldn't. And if you could figure out, which of those two leaks bothers a person the most, you can really almost project what their feelings are going to be about tax secrecy. What would you say to those people that are more troubled by the latter kind of leak?
I would say that we need to start to be very clear about what sort of tax system we want. And we need to ask for more purity in it rather than more compromise. In my opinion, and I'm not, the kind of expert who's going to be allowed to have this sort of opinion, but I've read other experts, and as lawyers say, and I have an opinion satisfactory to myself, that there are two, and really only two, general theories of governmental taxing and spending. One is to reduce both taxes and spending, and I'll use sort of a funny measuring point, to the size that they can both be strangled in the bathtub. And that was a kind of a semi-famous statement made by a leader of a sort of an anti-tax organization. The other is to collect taxes in the proper amount that's needed to spend to provide public goods that are needed to ameliorate what I believe is the inevitable tendency of a market-based economy to make the poorer majority of folks subsidize the better off minority. Unfortunately, politicians who ought to be pursuing this second general theory of tax tend to always get caught up in what they would call inevitable political compromise, where they undercut their own tax base by wanting to use the code as a giant machine for favoring or disfavoring various groups. Take your pick, makers of solar panels, etc., creating what we might call leaks or loopholes. I suggest it's better to raise tax revenue the old-fashioned way and spend it on public goods that can show the public that the taxes are worthwhile, rather than being the enemy of the public.
Well, there you have it. The article is titled "What We Give Up with Tax Secrecy." It debuted in the January 31st edition of Tax Notes. You could find it in our online archive or in print, or access it through the link below. And the author, Jack Cummings, thank you again, sir, for joining us.
Thank you.
Want more like this? Subscribe for more tax videos. Special thanks to our executive producers, Jasper Smith and Paige Jones, and showrunner and video editor, Jordan Parrish.